On Business Incorporated today, Egypt to enter energy deal to supply electricity to Greece. Senegal receives 75 billion euros from the European Investment Bank to finance a new vaccine manufacturing facility in the country. A Nigerian's Union Bank dissolves board after Titan Trust takeover. Hello and welcome to the program. I'm Will Ibang. We start off as always with market numbers from Africa, where sentiments were mostly positive at intraday. Nigeria's NGX was in the green at intraday, though marginal. Its index was trading 0.01% higher, while South Africa's index was also in positive territory, up by 0.66%. Egypt's equities markets closed on Thursday. However, its index closed negative, down by 0.76%. Also, the Nairobi Stock Exchange is closed for the holiday. Now to the Middle East, where major equities in the United Arab Emirates traded in negative territory at intraday. The Abu Dhabi index was down 0.72%. Also, Dubai shed 0.48%. Still within the region, Saudi Arabia and the Qatari exchanges closed in the red on Thursday. Both indexes were down 1.26 and 0.26% each. Now to Europe, where German exports rose more than expected in April, up by 4.4%, while imports increased by 3.1%, and that's according to data released by the Federal Statistical Office today. Ben Fajulin joins us from Berlin. Ben, a boost for German exporters despite dwindling trade with Russia. Tell us more about that.
Yes, the export powerhouse in Europe's biggest economy is cranking up the machine after the pandemic and is also showing its resilience. Those embargoes and sanctions that are slowly taking effect on Russia have seen imports from Russia beginning to drop. Trade in energy is the worst hit, of course, with prices surging around the world. We all know that. It's hitting motorists and businesses and households. It's benefiting Russia insofar as the higher prices mean more revenues, but it doesn't benefit the Russian people. I was talking to Vincent Stammer today from the Kiel Institute for the World Economy, and he said that German companies are rethinking their supply chains now and business ties with authoritarian states. So Moscow is going to miss out definitely in the short term and long term.
So speaking about benefits, the German economy minister has a message for Moscow. What did he say?
Yes, Robert Habeck said that time is running out for Russia. The economy is collapsing, he said, and Germany is playing its part with reduced exports to Russia by 60% in March and another 10% in April. There's also been a sharp drop in exports to Russia from allied countries participating in the sanctions. And as a result of the sanctions, Moscow has lost access to parts that are crucial to fighting this war. One example that Habeck gave was security updates for airplanes. He said, as a result, planes will soon be grounded in Russia. The EU sanctions at the moment include export bans on semiconductors, chemicals and specialized catalysts to basically target Russia's technology and industrial sectors as well. Habeck says that Putin is still getting money but can hardly spend it anymore because of the Western sanctions. And he also said that no one wants to invest in Russia anymore.
So how's this all affecting the European markets this Friday, Ben?
Investors are still awaiting US payroll data today to make bets about central bank tightening and to brace for any change in stance from the European Central Bank at a meeting next week. Investors hope that signs of a slowdown in the US employment market could sway the Federal Reserve towards less aggressive policy paths. And data this week show that record high inflation in the Eurozone is spurring bets on the ECB to tighten sooner or make larger interest rate hikes. The central bank has so far signaled plans to start raising rates next month to reach 0% or above by September.
Thanks a lot, Ben, for that update. We'll keep watch for the market next week. Now move on to Asia, where shares rose today as several major regional markets were closed for a holiday and investors looked ahead to the release of U.S. jobs data for May. Japanese stocks led gains among the region's major markets, with the Nikkei 225 gaining 1.27% on the day to 27,761.57 points, as shares of fast retailing soared by 5.86%. The Topix index rose 0.35% to 1,933.14 points. The Kospi in South Africa edged 0.44% to close, while Australia's S&P ASX 200 climbs 0.88% to end its trading day. Markets in mainland China, Hong Kong and Taiwan were closed on Friday for a holiday. Now in the U.S., stock futures were muted in early trade on Friday as investors focused their attention on more jobs data due out later in the day. Futures tied to the Dow Jones Industrial Average were up 25 points or less. S&P futures also hovered fractionally higher, while NASDAQ 100 futures sat below the flat line. Investors were also digesting employment data released by the ADP in the morning early today, which showed the slowest job creation pace of the pandemic-era recovery. Our correspondent, Maria Bird, gives a summary of yesterday's trading activity. Let's take a listen.
The U.S. stock market ended in an upswing on Thursday as the S&P 500 was up by 1.84%. The Dow Jones was up by 1.32%, and the heavy tech NASDAQ composite was up by 2.68%. It is clear that many investors are hopeful that the second day of June will end the week in a strong way and be much different than the first day of June. The President of the U.S. and the Federal Reserve have met and are looking to find ways to stabilize inflation and also to slowly increase interest rates, just enough to stabilize the economy, but to not impact the U.S. consumer. Supply chains are still a challenge, but the U.S. economy is looking up for the first week of June.
Thank you, Maria. Now, oil prices were roughly unchanged early on Friday, clinging to gains made in the previous session on doubts that producers belonging to OPEC Plus can hike their crude output enough to make up for lost supply from Russia. U.S. West Texas Intermediate WTI crude futures were up 1 cent at $116.88 a barrel, while Brent crude futures were up 7 cents at $117.68 a barrel. A decision on Thursday by OPEC Plus to boost output by 648,000 barrels per day in July and August instead of by 432,000 barrels per day as previously agreed was seen as hardly enough for a tight market. Government data on Thursday showed U.S. crude stockpiles fell much more than expected in the week to May the 27th, and gasoline inventories fell, defying expectations for an increase. Now to the metals market, where gold prices scaled a one-month peak early on Friday, riding on a weaker U.S. dollar that has also put bullion on track for a third straight weekly gain. Spot gold was up 0.2% at $1,871.28 per ounce, its highest level since May the 9th. Gold prices have risen about 1% so far this week. U.S. gold futures also climbed 0.2% to $1,874.50. Spot silver, which gained 0.5% to $22.39 per ounce, has climbed 1.4% so far this week. Platinum firmed 0.2% to $1,024.57 and is set for a weekly uptick of about 7.4%, its most since May 2021. Palladium also climbed 0.5% to close. Now in South Africa, The Tree is a South African company advancing knowledge about African art and storytelling by forming a digital marketplace for local artists to monetize their creativity via non-fungible tokens. But it's not only about the art. The company is using the art to generate awareness about blockchain and environmental sustainability. Let's take a look.
Artist Fatuani Mukeli daubs yellow paint on a series of canvases, bringing 4 striking portraits of a woman into relief at his studio in Johannesburg. Paintings like these would have once been displayed in a home or gallery, but these days Mukeli, a South African artist, has made thousands of dollars by digitally minting them for patrons who can also hang them in their virtual world. This is possible through a new platform called The Tree, a South African online marketplace that allows locals to promote and sell their art as digital assets without the vast energy typically used in blockchain transactions.
As an artist, NFTs contribute to add on to my exposure, to spread my footprint as an artist, and also allows me to be in spaces I never thought I would be in. You know, I mean, there's a virtual world right now. People are buying land in it, and your art can be on those walls. It can be displayed on those walls. People who have properties there, or if there's like a stadium or a game, you can also have people buying your art and putting it there, and you make revenue. I mean, there's advertising space in this virtual world. There's everything we need in this current world is also needed that side.
Mukeli's customers receive both the actual canvas and the digital receipt known as non-fungible token NFT, while other artists on the tree sell up to 5 limited edition NFTs for each piece.
I think it's important as an artist and a creative to always play where the ball is going and not necessarily where it's at. And currently we are living in a traditional universe, and there are new spaces such as the metaverse. And I think with me as an artist, I play between mixed reality, and it's important that my work exists in different spaces.
Critics say blockchains, the digital ledger used to store information, are not climate friendly because they guzzle computing power. In May last year, Bitcoin mining devoured about the same amount of energy annually as the Netherlands did in 2019, according to data from the University of Cambridge and the International Energy Agency. The tree saves energy by running a Polygon, a more eco-friendly blockchain that uses a fraction of the power and offsets each transaction by sending money to GreenPop, an environmental organization that plants trees across sub-Saharan Africa.
The blockchain that we've chosen to go with, of course, doesn't have as much of an impact at all. In fact, it's fractional compared to, the current blockchains such as Ethereum. And reason being is because it doesn't use as much computing power to process as many transactions. So whereas, one blockchain like Ethereum is using, computing power to process transaction by transaction, this the blockchain that we're going with is called Polygon, and basically it uses, a fraction of that by processing a lot of transactions at once instead of one at a time.
The popularity of NFTs exploded in 2021, with one piece selling for a record $69.3 million. That growth, however, has shown signs of losing its fizz. Sales on OpenSea, the largest NFT marketplace, reached nearly $5 billion in January, a giant leap from the $8 million the year before. But they have since declined to about $2.5 billion in March.
What a beautiful report there. Now, blockchain is fast becoming the new normal for future transactions. And after the break, more stories from the African continent. Stay with us. Welcome back. Fitch Solutions, in their latest report, have ranked Ghana as first in West Africa and second in Sub-Saharan Africa as the best destination for investment and trade. The report showed that Ghana outperformed the West Africa average of 36.4% with a trade and investment risk score of 50.9%. And this is despite the challenges facing the economy. Harrison Ahogba, investment and financial analyst, joins us from Ghana to discuss the significance of this. Hi, Harrison. Good to have you.
Hi, good afternoon. How are you?
Hi, this is quite a big deal for Ghana, Harrison, but I want to know, have businesses felt the impact of this? Has there been any difference following the report?
Thank you very much. sincerely, to say the truth, the answer is no. And I know you'll be surprised by that. A big no, because largely, as you know, in Ghana, most of our economies are largely driven by informal sector. So as we speak, I can assure you that most people have not even heard these ratings and its impact on their businesses. Number two, because we are largely import dependent, we are always looking at the dollar and then the euro, and also I'm not even sure the information might have gone even to the local stations to let businesses know that they are better positioned because of this very, very important announcement. So the answer is a big no.
So how do you think businesses can make the most of this? What do you think can be done to ensure that businesses actually tap into this ratings ranking that has been given and probably draw investors?
Yeah, thank you very much. So ordinarily, this information would have been celebrated in other jurisdictions because of the impact and potential impacts it's going to have on businesses. So for me, let me even take you back a little. In the years past, we have the African Growth and Opportunity Act, a strategic initiative between African countries and the US government, which was meant to bridge the gap in terms of our inability in especially Sub-Saharan Africa to turn most of our raw materials and processed goods. So now you are speaking of AFTA, which has a larger market for the whole of Africa. And think about it. This information should be something that should give Ghanaian businesses and small and enterprises an opportunity to better position themselves to say that, listen, these indicators are in our favor. We'll leverage on these through the AFTA platform, and then we can pitch favorably to investors to come in. If you look at the indicators that were used, it talks about the stability of the economy. And if you ask me sincerely, one of the things we boast about in Ghana, in the Sub-Saharan Africa, is how stable our political system has been ever since we became a democratic nation. So for businesses in Ghana, I would have thought, and I'm still hoping, that we'll capitalize on these factors and say that, yes, if you are part of AFTA, you leverage on these, talk to the developing and investors and tell them, listen, these indicators are good for you. Come, our economy is stable. Yes, you have issues with acidity depreciation, which we are going to talk about later, but the point for me is that it's the best platform for us to have been able to pitch to people using this criteria. It's an awesome opportunity, but I struggle to say how we are not taking advantage of it.
Yeah, the report also mentioned about the economic openness, and also recently Ghana had some oil inflow from that. Do you think this formed part of the report, was taken into consideration?
And of course, the impact of, ever since we discovered oil, but the impact has been very positive. There have been some gains that we have made over the period, notwithstanding the challenges. The oil, as we call it, the black diamond, has its own share of problems. But if you ask me, all these things were put into consideration. If you look at the criteria, they talk about openness to governance. So in Ghana, for the oil industry, we have an oil platform that we call the public interest and accountability, which hold government responsible for how oil revenues are used over the period. So if you ask me, yes, it has influenced the decision. And again, because we as a country on the discovery of oil didn't have the capacity, we have a lot of foreign oil investors, i.e. Tullow, we have Shell, we have Chase, and we have other people who have invested heavily in technology and oil. These are international institutions that have the capacity to even influence how the outlook of our businesses are done. So I think the discovery of oil, its revenue, and its management has also contributed to the rating.
Okay, so the report also raised concerns regarding the depreciation of the cedi against the US dollar amid the high debt servicing in the country. But how is this impacting investor confidence in the economy?
Well, Will, to tell you the truth, largely as a country, we have always, like I said earlier, been import dependent. And to that extent, it means we don't have an opportunity to grow our import substitution industries. A lot of the issues here is that we export the raw materials in that state, people add value to it and they bring it back. This largely puts pressure on the cedi. And because of the common denominator being dollar, even if you want to transfer or do business with Turkey or China, you still have to change it to dollar before you do that. Another case in point that makes the cedi depreciation affecting us more is that because of the way we have also invited some foreign institutions in terms of the repatriation of their revenues at the end of it, particular financial period. It also puts pressure because once they in Ghana city, they have to convert it and transfer. But when it comes to this particular rating, I don't think the investors have any issue at all because whatever currency in which you invest, that is what you'll be paid in terms of maturity or return. So if I'm an investor and this is the best time I'd have to consider Ghana because the ratings are very good, it's inuring to my benefit. I know I'm getting my returns in my dollar, my pound, and euro. So the confidence is very high. To tell you the truth, every other day you should come to the Kotoka International Airport and you see the number of people coming in and coming out. There's a lot of potential that we can tap in, especially from this information. It puts us in a better position to compete favorably in the sub-region. I'm hoping that we'll do a good work to leverage on this.
There was also mention of reluctance on the part of private investors to put money in the infrastructure sector. Could you tell us more about that?
Well, when it comes to the issue of private investment, these are people who raise and source for funds themselves. They also go to other markets and take it at some higher interest rates. So the skepticism is that, in fact, especially because of what had happened we just recovered from COVID, all of us as the world, just trying to adapt. And then Ukraine and Russia has also come in. The construction industry is largely, as it were, handled by the government. It's a central government decision. So if you are a sole private person, be it sole proprietor or limited liability, and going to start ventures, you have to source for your funds. And you rightly said, if I have to go to the outside market and get some dollars and come and do a certain project and the government doesn't pay me on time, it means I've locked up my funds and it puts so much pressure on them. So most of them are very skeptical. And when it comes to the banks, they see it as a long-term project. The certificates for completion of these infrastructures have to be done. The government can give you an assurance, but the time to pay sometimes delays, and this puts a lot of pressure. So they are very careful whether to do or not to do.
Okay. Thank you so much, Harrison Harogba, investment and financial analyst from Ghana. Thank you for joining us today.
Thank you so much. Thank you.
Now, Egypt and Greece are entering into a deal to bring electricity from Egypt and Israel to Greece. The plan to build cables to supply electricity is getting a renewed push as Europe seeks to slash reliance on Russian energy. One of the cables is planned to transport only green energy, helping the bloc move forward a 210 billion euro energy plan. The projects have the potential to replace not just all of the gas that Greece gets from Russia, but also supply from its neighbor countries, while surplus power through the cables will go to other parts of Europe. The first stage of the project is estimated to cost about 2.5 billion euros for a total transmission capacity of 1,000 megawatts, which is expected to double after the next phase. Construction work is due to be completed at the end of 2025. Now to Senegal, where the Institut Pasteur de Dakar and the European Investment Bank, EIB, have announced the conclusion of a 75 million euros financing agreement to support the construction of the new Madiba vaccine manufacturing facility in the country. This large-scale financing will help to significantly increase Africa's medical and vaccine production capacity to fight COVID-19 and other endemic diseases. This will also reduce the continent's dependence on imports, which currently cover 99% of its vaccine needs. Once the new manufacturing facility is complete and operating at full capacity, up to 300 million vaccine doses will be produced each year for the African continent. Union Bank of Nigeria has announced the dissolution of its board and the appointment of a new chief executive officer. According to a statement sent to the Nigerian Exchange Limited, the new CEO is Titan Trust Bank's managing director, Mudassir Amre. The decisions come after Titan Bank concluded the takeover of Union Bank this week, Nigeria's second oldest bank. The bank has also appointed a new chairman and 3 directors. Titan Trust Bank purchased 93.4% stake of Union Bank. With the new acquisition, 10 of 30 members of Union Bank have exited the company. The appointment of Mr. Ambre will take effect from June the 2nd. And that's it on the program. I'm Willie Bong. Thanks for watching. See you next time.